Yes.
It feels, Pat, like the market has priced in a bit of perfection.
Ask me. Ask me.
You're a host.
Yeah, ask me how I feel about it. 3 days from now, because I'm all over the place as to whether.
Yes. And by the way, we might have feelings or gut or that. It doesn't necessarily mean we're going to change our investment strategies, because we believe that we will have recessions in the future. We will believe we will have corrections in the stock market. We will believe we'll have bear markets in the future.
And we believe we don't know when those will happen.
That's correct.
Right. So I just read an article last week. It's called "Now's the Time to Stress Test." And the stress test on a portfolio is
That's
when
right.
you put it through.
Yes.
Through
what happens if
an algorithm, AI, if you will, an algorithm that actually tells you what the probable outcome is if certain things happen. I'm trying to make comparisons between this and the .com. And I don't believe this is anything like the .com, because of Walmart came out and announced that they don't expect that they will.
They're not going to be hiring.
Yeah, they don't expect that they're going to move their head count. In fact, they're used to attrition.
They expect their revenues to double before they hire more people. It was something like that.
It was amazing. And then you see companies like Royal Dutch Petroleum comes out.
Shell Oil. Yeah.
Shell Oil. And then you see Rolls-Royce, who they build engines. And you just think, where does this stop?
Because they all believe there's technology is going to exist to replace human labor.
And we run a business and we see it.
Correct.
Right. We see it. I see it in the medical care especially.
The question is, how long will things okay, but it's priced such that all these data centers, the billions of dollars that have been.
Well, first of all, I don't believe that all the data centers that have been announced will actually be built. Let's go with that.
Okay.
I think that's an appeasement to the current political environment.
All right, fair. There might be. Well, clearly some of that. Yeah, okay, Trump. Yeah, sure. Well, here's $600 billion. Just making up a number out of the top of your head. I get it. But if you look at, one of the things during the .com, there was all this fiber optic that was laid.
Over capacity.
Way over capacity.
Right. Which then
those companies collapsed. It was pretty much, it was a nasty bear market, but it was still somewhat, it didn't have the widespread contagion like the the financial crisis caused by the housing bubble.
This did not. The .com did. That's correct.
Yeah.
That's correct.
It was a different, highly, but I just think right now, it just feels like things are priced in to perfection. And so even if I think that, does it mean I'm going to make any changes in my portfolio? Probably not. And I was having a bike ride with a buddy the other day, and we're talking about the markets, and after we talked about politics for a while and religion, and then we went to the markets.
That sounds great.
But he said, I just watched that movie, The Big Short. I watched it for the second time the other day. And The Big Short, I don't know if you remember the movie, Pat. The
I
book
certainly do remember. I read the book. Too.
And it was about...
By Michael Lewis.
Yes, and it was about this guy who he looked at what was going on in the credit markets and the loans on these houses, and he says, this is completely unsustainable. I'm going to bet against this because clearly it's not sustainable. It's going to blow up. Right? And so he started...
Well, he found someone that would sell him those options, which I thought should have been the main point, which is because someone took the other side of the trade.
Right. But if you think how many years it took before he was proved right.
Oh, yes.
And by the time he was proved right, there was no one else with him.
That's right. No, his investors had all bailed.
All bailed on him.
It all bailed.
And it just reminded me that a bull market can run much longer than you can stay liquid. And I personally, in the early 2000s, it was probably mid-2000. I don't remember the exact year. I personally bought puts on Countrywide and IndyMac Bank.
I bought them on Countrywide.
Both went bankrupt. My puts both expired out of the money, which means I took some money to bet that these companies were going to decline in value, and they were like 2-year options, as long as I could get at the time.
And you were right,
But the bull market lasted a lot longer than my options,
which was hard to believe. But the point being is, if you didn't ride it the whole way, if you didn't get the upside at the end of the bull market, you wouldn't know when to get in on the downside.
That's exactly right.
Right.
Which is why we're come back to asset allocation. And now's a good time to look. And the whole concept, Pat, of stress testing your portfolio, like what does my personal account look like? If the stock market fell 30%, what would my account look like? And of my fixed income, how much of this is in not the highest credit rated?
And people have a tendency to let their portfolios run, which, by the way, when you're working and you're putting money in your 401k and you're 90% equities, it doesn't make that big of a deal. But when you're 71, 72, you're taking income and your portfolio's crept from 60% to 80%, which 100% conceivable over the last few years, that if you don't bring that back down, then you've got risk in the portfolio that you didn't have just a few years ago.
That's exactly right.
And the thing is, and we've talked about this on the show before, it's hard to do because you're actually selling off the thing that's done really well.
Yeah, and when you reallocate, you end up selling the best performers of your portfolio,
which is hard to do, but it's imperative.
Particularly, not so imperative when you're 30.
Yeah, you've got room.
To your point, when you're either nearing retirement, at retirement, no longer working, particularly if you're no longer working.
Yes.
Now you need to be much more concerned about preserving what you have.
We've been doing this a long time, Scott. You've known me for a long time. I turn 63 next month.
Happy birthday.
Thank you.
I'll get you the same thing I got you last year.
Thank you very, very much.
And the same phone greeting of singing you happy birthday, which I don't think I ever have.
So I spend a lot more time on my asset allocation than I did when I was 40. I have a much more defined investment thesis.
And more diversification than you had.
And a lot more diversification.
Because it was all stocks.
Yes.
100%.
Yeah. Yeah, and it didn't really matter because I wasn't going to take income anytime
you had
soon.
20 years before you needed some income.
There were lots of times to trip up.
Yeah.
Not so much now.
Yeah.
So.
Well, you're still employed today. Who knows tomorrow?
Do you know something?
I don't know.
Should we be talking off air?
This was a year and a half ago or so. We had our annual. We have an advisors conference once a year. All the advisors across the country all come together, and there's great education and award stuff. And we got some sort of lifetime achievement award or something like that. I forget what they called it. They honored Hansen and McLean for the company that would. And after they honored us. Are we getting fired?
That's right. And so I told my son about this, and he said, well, did they play Closing Time, the song, when you were stepping off the stage? Which I thought was really funny.